I don't know what's going on because
Your
it
net,
keeps
hello?
kicking me out. I don't know what's going on because my network is fine. It keeps kicking me out and bringing me back in. But I'll see as we proceed.
Okay, you tell me. Right. So we're talking about the. Okay, let me just summarize. We're talking about the books of. We're saying that every transaction is to pass through a what we call a series of processes in the accounting cycle. Right. And we're saying the first thing that happens will be that the transaction will take place. After the transaction takes place, the second stage would be the a recording of source documents, which serve as proof that a transaction is actually happened. For example, receipts, invoices, credit notes, and stuff like that. The third thing would be the recording in the books of original entry, which is the one that we will be our focus for today, whereby we'll be looking at the business cash receipts, business cash payments journal, trust cash receipts journal, a trust cash payments journal, the fees journal, the general journal, and all other journals that are used. Then after recording in the books of original entry, we then post to the ledger. The ledger is where we do the double entry principle, which is the debiting and crediting of the amounts in the ledger. So that will be done in the ledger. Right after that, we then prepare our trial balance. The trial balance will be a list of our balances as they appear in the ledger, our debit and credit balances. So we'll keep a list which is called the trial balance. After that, we then prepare financial statements, which is a summary of the performance of the business over the financial year, which can calculate the profit, which can also show the statement of financial position, the assets, the liabilities of the entity, and stuff like that. Right. Then we should also know that it is a requirement according to Rule 54.6 of the Law Society that accounting records should be kept on a day-to-day basis, recording all the transactions that happen within the life cycle of the business. Right. So we're saying the first thing that happens when the transaction happens, we have to record in book in the source documents, the receipts and stuff like that. Right. So now let's look at the different books of original entry. Right. We keep what we call a cash receipts journal and a cash payments journal. A cash receipts journal records money received. A cash payments journal receives money, records money paid. So we find that in each business there will be two cash receipts journal, one for the business and one for the trust account. Remember that it is a requirement that if a law practice is holding money on behalf of others, they should not keep it together with their own money. They should keep two bank accounts, one for the trust and one for the business. Right. So we're going to have the following journals. One, business cash receipts journal. Right. So this one, all money received on behalf of the law, like for the law practice. So now it is their money. So we should know that it does not include amounts received on behalf of others. So if you are a law practitioner and you do work and you are paid for the work that you have done, you can that money can go in the business cash receipts journal. But if a client is giving you money for something that you are going to do in future, then it doesn't go in the business cash receipt because you've not yet done the job. It's not yet your money, so you don't put it in your bank account. It goes to the trust bank account, right? So that's the business cash receipts here now. It records the money that it receives, the money that belongs to the law practice, right? Examples include of amounts recorded in business cash receipts here now. Right, capital contributed by the law practitioner. In cash. Loan taken by the law practice. Fees paid by clients. For work done. Interest on business bank account. Amounts paid by clients with respect to amounts owed. So maybe if they are owing us an amount, then they decide to pay us. That will go in the cash receipts journal. So one thing that you should know is in the business cash receipts journal, we record the money that belongs to the law practice. So you don't record money that is held on behalf of others. It should be money that belongs to you as the law firm. I think you shall see the distinction next week when we do examples. Number 2, business cash payments, records all payments made from the business bank account, right? So normally the business cash payments journal will record payments that relates to the business, payments that relates to the business, right? So examples of payments that can be done. General business expenses. For example, salaries paid, telephone, expenses paid. Right. We also have expenses paid with respect to clients of the attorney's practice. For example, sheriff fees. If the client does not have money, is not yet paid you, maybe you might have to pay sheriff fees. Advocate fees. Processing fees, traveling expenses. So as long as the client does not have money that he has paid already, we are supposed to pay on his behalf, and then we'll charge him so that work can be done. So we're supposed to record it in the business cash payments, right? Right. In law practice is required to maintain separate bank accounts for business monies. When we say business monies, that is for the law practice, in money held on behalf of others. Which is trust money. So as a law practitioner, you are not allowed to use trust monies. You can only use your own money. So the trust bank account, you don't touch it. You only use it maybe if you are paying expenses on behalf of your clients. We have got money in the trust account, not for personal expenses of the law practice. Right. Money paid into the trust account may include money paid with regards to services to be rendered. That is, the entity is going to get the service at a later stage. Money paid by third parties. Right, maybe let me just, before I put this, let me just say, let me just say 3. Trust cash receipts journal. Amounts paid, received on behalf of clients. For tasks to be completed at a later stage. So you'd find that the general nature of a trust monies, that means the job has not yet been done. Otherwise, some of it will become ours at a later stage. But for now, before we do the job, that money should be in the trust account. Then when we have done the job, then we can transfer it to our business account. So these monies will be in the trust account. So money paid by third parties in respect to purchase transactions. For example, a client purchasing property. So when a client is purchasing property, they can ask you as the law firm, we help them to do the transaction, so they can transfer money, so that you can be able to undertake the transaction on their behalf. Right. Money to be refunded to a nominated person. So as long as it has not yet been refunded, it's still within our business, it should be in the trust bank account. Transfers from the business bank account to the trust bank account. For example, if a client paid money into the trust and we used the money to do his services, and later on the check that he had paid is rejected, we are required by law to compensate that money and then claim the money from the client. So in the meantime, we should cover for it. Or maybe if the trust bank account has got a negative balance, you as the law practitioner, you are supposed to cover for it. Then you claim the money, whatever you can claim from the persons who have taken the money. Right. So that's trust cash payments general, cash receipts general. Then we've got number 4, trust cash payments general. This records all payments made from the trust bank account. So if we make a payment directly from our trust bank account, that amount, it has to be recorded in the trust cash payments now. Examples include expenses paid for a specific purpose. On behalf of clients. So if a client he has got money in the account and he wants you to pay, for example, sheriff fees, you can be advocate fees, you can use your account. Money paid to third parties. According to client's instructions. For example, he tells you that I want you to pay, I want to buy a machine and I want you to facilitate the deal. If the deal is concluded, I want you to pay so and so. So when you pay that so and so, you take the money from the trust bank account. Payments to instructed attorney. Concerning correspondent transactions. Right, if a law practitioner has got a case in another province where he doesn't have the jurisdiction to represent the client, he can talk to another practitioner in that province to act on behalf of his client. So any payments that have to be made, as long as the client has got money in the bank account, then it has to be recorded in the trust cash payments, Transfer of money from trust bank account to business bank account. Right. If a client has given you money, concerning the, what do you call it, for representing the person, and then you complete the job, you are allowed to take your money from the trust account. So when they pay you before you do the job, you put it in the trust account. But then when they pay you, you then have to, when you have done the job, then you can take your money from the trust bank account. So before you do a job, you don't take the money from the trust payments account. Right. Then we've got sheriff's journal. It's not all practitioners who keep this journal, but if you are making a lot of payments to the sheriff, you might need to keep a sheriff's journal. So this records claims for services rendered on credit. By sheriffs. If you paid, you'd record in the business cash payments journal. So if you have got sheriffs providing a lot of transactions, you can decide to keep a sheriff journal, but it can be an option then. Advocates journal. Right. This records claims for services rendered on credit. By advocates. So if there are any services that are rendered on credit by advocates, then would record them in the advocates journal. As I said before, okay, this is number 6. The sheriff and advocates journal, it's not all law practitioners that keep those ones. If they are not kept, the transaction will be recorded in the general journal. Right. We have got fees journal. That's all fees charged clients. For which payment will be received later. So if you provide services to clients on credit, and you charge them, you give them an invoice, you have already done the work, those fees will be recorded in the fees journal. If they pay, you would record in the cash receipts journal. Right. Petty cash journal. This records flows into and out of the business petty cash. Right, what happens is most of the payments that are done by businesses, they are paid through EFT and through the bank account. But they might need to make smaller payments. For example, they need to buy a pen, they need to buy sugar for their employees for tea. They can't write a check for that. So usually you'd find that they would have a petty cash journal whereby they record such payments. Transfer journals. Right. When clients have got money for work that will do in future, that money is recorded in the trust bank account. But when we've done the job and fulfilled all the what we had agreed, we can now be allowed to take the money from the trust account and transfer it to the business. So all such transfers will be effected also through the transfer channel. Transfers from trust creditor account to their business account. So you find that our clients will have two accounts, one in the trust books and one in the business books. In the trust books, there will be money that they've paid that is held under trust. Then in the business books, there will be the money that they are owing for services rendered. So if we fulfilled what we had agreed, then they will have to pay back whatever the money that they have. So whatever money that is paid back, and it is transferred to the business. It will be transferred to the business. Right. Then we also last we've got a general journal. In the general journal, we record all transactions that cannot be recorded in any of the above journals. All the above journals have got a predetermined purpose, but we've got a general journal which does not have a predetermined purpose. So anything that is recorded that it does not have, which does not have a specific, which does not fit in all those other specific journals, should be recorded in the general journal. Right. Our examples, they include correction of errors, year-end of adjustments, drawings of assets by the owner. other assets other than cash. If they take cash, it will be recorded in the cash payments, right? Purchase of non-carried assets on credit. Sale of non-current assets on credit. Writing off credit losses. When we say credit losses, these are customers that have failed to pay. Maybe they've died or they simply disappeared, so we can't keep the debt in our books. We have to write it off because we'll no longer recover it. Right. Providing for depreciation. In accounting, we provide for the loss in value of our assets due to use. We call that depreciation. So we have to provide for depreciation. So when you provide for depreciation, we record in the general journal. Right. Any questions? Right. Let us discuss just one or two things on trust accounts.
No, sir. It's usual.
Sorry, my man, just a second. Right. Whenever money is received in the trust bank, a receipt should be issued. And should clearly indicate the following. The date of receipt, from whom the money is received, the amounts in words and in figures. Purpose for which money is received. For example, divorce case. Accounts affected. Then the name of the issuer of the receipt. So all these things should be on the receipt whenever money is received under trust. For example, we can say maybe for example, they've put money in the bank account, and that money that they've put, you have done they want you to do a particular job in future. So you should issue them with a receipt that will have all of the following. Right. Then a trust cash payment should be accompanied by supporting documents. Indicating the following. The date of the payment, to whom EFT is made, the account affected. For example, if it's salaries, you have to state that salaries. The reason for payment. The salaries are being paid for work done during April, and the amount of the transaction must also be included there. Right. So I want you to go through chapter 4. Then when we meet, I will do the questions whereby we'll try to prepare the cash receipts journal, cash payments journal, both of the trust and of the business, the fees journal, and then the other journals. So that will be the work that we'll be doing in our next class. Do we have any questions?
Hello? Can I please ask? Tomorrow, are you busy?
Tomorrow in the evening I have classes. What time?
Not, I think in the afternoon, because I might need an assistant with the
I can do.
assignment that I have. In the afternoon, because I might need assistance with the assignment that I have to submit by, I think, next week, Monday.
We are breaking. Can you? I think I can make a plan. Can you just send a WhatsApp?
Yeah, send the WhatsApp.
Send a WhatsApp. Right now I'm going into another class, so I will see it later, but I'll answer you. But I think I can have time in the afternoon. It's okay. Okay, thanks.
Thanks.